I think if you look over the 4 years of his presidency, the gold price is going to do very well. I think it's going to do very well because I see the only political way out of our economic dilemma is, as you suggest, increase the money supply to print. We can't fund the expenditures with tax. The bills for entitlement are coming due. Our society is becoming older, more beneficiaries, fewer workers. The only way out of this circumstance is to reduce the purchasing power of the dollar. Traditionally, that's been extremely good for gold. I think the principal reason why one owns gold is the inevitability of the decline in purchasing power of the U.S. currency, of the Canadian currency, of the euro, of the yen, of the renminbi.
Renowned natural resource investor RickRule shares valuable insights into the promising future of gold, particularly during economic uncertainty. He predicts substantial momentum for gold, anticipating price increases fueled by shifts in monetary policy and ongoing financial challenges. Rick highlights that one of the key reasons to invest in gold is the expected decline in the purchasing power of the US dollar. This viewpoint resonates with historical patterns where gold has consistently proven to be a dependable store of value during turbulent periods. The market is currently showcasing these trends, with gold prices approaching pivotal thresholds. In recent trading, U.S. gold futures hovered around $2,730.20, influenced by geopolitical and economic factors. The value of gold is increasingly intertwined with the complexities of monetary policy, international trade, and global economic fluctuations. Throughout history, gold has been a fundamental currency, evolving from physical coins to paper notes backed by gold standards. Transitioning to a fiat monetary system has heightened gold's significance as a protective asset. As inflation and dollar weakness persist, gold remains an appealing choice for investors seeking stability and security. RickRule's insights highlight an essential truth. While commercial banking systems may not always prioritize customer interests, gold stands out as a strategic investment. Goldman Sachs analysts predict that these inflationary pressures could significantly boost gold demand. As import costs rise and consumer prices increase, investors will likely allocate more funds to gold as a protective financial instrument. Metal's traditional role as an inflation hedge has become increasingly attractive in this economic climate. Before we dive deeper into this video, remember to subscribe to our channel. Hit the bell icon so you never miss an update, and share this video with your friends and anyone who could benefit from it.
I think if you look over the 4 years of his presidency, the gold price is going to do very well. I think it's going to do very well because I see the only political way out of our economic dilemma is, as you suggest, increase the money supply to print. We can't fund the expenditures with tax. The bills for entitlement are coming due. Our society is becoming older, more beneficiaries, fewer workers. The only way out of this circumstance is to reduce the purchasing power of the dollar. Traditionally, that's been extremely good for gold. I think that the underlying strength of the U.S. economy isn't Trump. It's the strength of the American commercial culture. The fact that the United States, despite all its difficulties, still invests $25,000 in capital expenditures per U.S. worker every year, about double the global average. Our culture also traditionally has been, like Canada's, very, very welcoming of immigrants. And it's also been a culture where 5 or 6 young kids could take over a garage in Sunnyvale and out pops Google or out pops Apple. I mean, the ugly truth about America's culture, or maybe the great truth, depending on your point of view, is that our individual persistence, our individual tenacity has funded our collective stupidity. The problem with that is that politics is trying to dumb down that individual initiative while increasing the collective stupidity. I also agree that most very large commercial banks don't have the interests of the customers in mind. Whether or not that's good or bad for gold is a different circumstance. We could have a long discussion about banking. As you know, I'm a career banker. I think the principal reason why one owns gold is the inevitability of the decline in purchasing power of the U.S. currency, of the Canadian currency, of the euro, of the yen, of the renminbi. Ask your listeners to think back to the year 2020 and then fast forward to 2025. Think what's happened to the price of their groceries. If they're American, think what's happened to their health insurance or their health care costs. Think what's happened to rent or mortgages or groceries. These are all political issues. The idea that the basket of goods and services that you consume to run the Lin family has only gone up by 2.5 or 2.6% a year compounded in the period 2020 to 2025 is farcical. And yet people look at this index as though it were real. This is just common sense. In the United States, there's a huge incentive to have the CPI understate inflation. That is that all of the entitlements, which we can't afford, are geared to the CPI. The CPI cost of living increase for Social Security, as an example, is set to the CPI, 2.6%, when in fact, the underlying depreciation of the purchasing power of the US dollar is probably more like 7.5% or 8%.
Okay.
And frankly, it's worse, not better, in Canada.
RickRule's analysis of the period between 1970 and 1980 reveals a dramatic economic narrative centered on gold's price movements and the US dollar's declining purchasing power. During this decade, gold experienced a remarkable surge from $35 to $850 an ounce, while the US dollar's purchasing power plummeted by 75%, according to the Office of Management and Budget. The gold market demonstrated extreme volatility during this period. Starting at around $39 per ounce in 1970, the price climbed to nearly $200 by 1974. After a temporary decline in 1975 and 1976, gold prices dramatically escalated, reaching approximately $800 in 1979 before settling at around $615 in 1980. Rules emphasize that the fundamental economic challenge was not revenue generation but excessive government spending. This observation aligns with the broader inflationary trends of the era. Since 1970, the US dollar has experienced an average annual inflation rate of 3.88%, resulting in a cumulative price increase of 713.41%. In contrast, the period since 1980 saw a somewhat moderated average yearly inflation rate of 3.03%, with a cumulative price increase of 283.02%. These statistics underscore the significant economic transformations and the persistent erosion of monetary value, highlighting gold's role as a potential hedge against inflationary pressures and financial instability. Let's get back to the interview.
Coming into the 1970s, we had unsustainable debt service, unsustainable entitlements, and we couldn't raise the taxes anymore because the highest marginal tax rate then was 70%. What we did was devalue the purchasing power of the US dollar. So we honored the nominal value of our obligations. So some old codger who in 1970 was getting $800 a month in Social Security still got his $800 a month, but bought $200 worth of goods and services. According to the Office of Management and Budget, the purchasing power of the US dollar in the period 1970 to 1980 fell by 75%. Not coincidentally, in the same period of time, the price of an ounce of gold went from $35 to $850.
Yes.
But going back to your original problem, this isn't a revenue problem. This is a spending problem because they spend too much. Right now, government expenditures are 30% higher than government revenues. Government expenditures in the U.S. are 30% higher than government receipts. This is not a tax problem. This is a spending problem. Let's look at the numbers if you want. This could make a very boring show, but it'll be interesting to me. The on-balance sheet liabilities of the U.S. government are $36 trillion. That's what we owe the bondholders. Rather than getting smaller, by the way, U.S. GDP is $30 trillion. That number, rather than shrinking, is growing by $2.5 trillion a year. But that isn't the real problem, David. The real problem you can see by looking at me. There is the net present value of off-balance sheet liabilities in the United States, Medicare, Medicaid, Social Security, federal pensions, military pensions. This number, not according to some cranky old fat libertarian, but rather the Congressional Budget Office, the net present value of unfunded liabilities is $100 trillion, 3 times the on-balance sheet liability. And that number grows by $2.5 trillion a year. Every year, we get $5 trillion deeper in consolidated debt. Now, the gross federal government revenues, before they spend a dime, the gross revenues, tariffs, taxes, everything, is $5 trillion.
Right.
In other words, the debt grows every year by gross federal revenues. This is unsustainable. This is completely unsustainable. I urge people who believe that the Department of Government Efficiency, run, by the way, by a billionaire who's enjoyed several $1 billion worth of subsidies. The idea that the Department of Government Efficiency is going to greatly reduce the size of the U.S. government is laughable. Anybody who would like to contradict that for narrative purposes should read The Triumph of Politics.
The Grace Commission during the Reagan administration tried this, right? What's different this time?
Nothing's different. It's not going to happen. I mean, the biggest expenses that we have, particularly because of American demographics, are entitlement expenses.
Yes.
Anybody who runs for president threatening to reduce the unsustainable benefits to voters is going to lose.
Yes.
It's an unsolvable, conventionally unsolvable problem.
Gold has long been a reliable hedge against inflation and currency devaluation. As the purchasing power of fiat currencies declines over time due to inflation, gold remains a tangible asset that preserves value. The rising price of gold in response to economic and monetary pressures highlights its role as a store of wealth, especially during times of financial uncertainty. With a history of performing well during periods of dollar depreciation, gold remains a prudent choice for investors seeking stability and protection against economic volatility. Do you believe gold remains the best hedge against inflation in today's economy? Let us know in the comments below. We'd love to hear your thoughts. If you found this video helpful, like, comment, and subscribe for more valuable insights. Thanks for watching.